Should you be trading stocks under your own name? Or should you be hiding behind a corporate shield like some kind of financial superhero? This question sounds simple, but the answer could mean the difference between protecting your wealth and handing it over to lawsuits, taxes, and your own worst instincts. Let's set the stage. Every year, thousands of active traders wake up and realize they've been playing the game on the hardest difficulty setting without even knowing it. Trading under your personal name means your brokerage account, your home, your car, and your dog are all technically on the table if things go sideways legally. The LLC, or limited liability company, was basically invented for moments exactly like this. It's a legal wrapper that separates you, the human, from you, the trading entity. Think of it like wearing oven mitts. The pan is still hot, but at least your hands survive the experience. Now here's where the early optimism kicks in. People open LLCs, dreaming of tax write-offs, legal protection, and that sweet, sweet sense of professionalism. But then reality shows up like an uninvited guest and reminds you that the IRS has very specific and very unforgiving opinions about trading LLCs. The dirty little secret is that most retail traders don't actually qualify for the tax benefits they're imagining when they form that LLC. Unless you meet the IRS definition of a trader in securities, which requires substantial, regular, and continuous trading activity, you're just a hobbyist investor with extra paperwork and an annual state filing fee. Here's the psychological trap. The LLC feels like a move that serious traders make, so forming one becomes a proxy for confidence rather than a calculated legal strategy. We confuse the costume for the superpower, and suddenly we're paying $300 a year to feel professional without actually changing our outcomes. Historically, traders who've benefited most from LLCs are those operating at significant scale. Think multi-six-figure accounts, high trade frequency, and legitimate business expenses like data feeds, software, and office space. For the average person trading $20,000 or $30,000 on the weekends, the LLC is often more theater than tool. But let's play devil's advocate, because there are real, legitimate scenarios where an LLC earns its keep. If you're managing money for others, even informally, or if you're in a high lawsuit risk profession like medicine or contracting, structuring your investments through an LLC adds a meaningful legal firewall. The misconception worth dismantling right now is that an LLC automatically gives you better tax rates on trading income. It almost never does for short-term traders. Short-term capital gains are taxed as ordinary income, whether you're a person or an LLC, and a single-member LLC is what the IRS calls a disregarded entity, meaning it's taxed exactly like your personal return anyway. So what's the actual playbook here? If you're a high-volume trader with real business expenses, explore an S-Corp election or work with a CPA to see if trader tax status makes sense. If you're earlier in your journey, focus on mastering strategy and position sizing before you spend energy optimizing a tax structure for profits you haven't consistently made yet. The deeper lesson from every trader who's gone down this road is that structure should follow substance. You build the legal scaffolding around a proven, functioning operation, not before one exists. Buying an LLC before you have a repeatable edge is like buying a trophy case before you've won anything. What actually moves the needle long-term isn't your legal entity, it's your process, your discipline, your risk management, and your ability to stay unemotional when the market is trying to make you act like a fool. The best traders in the world aren't winning because of their business structure. They're winning because they take the same rational approach on day 1000 as they did on day 1. At the end of the day, the LLC versus personal account debate is really a question of where you are in your journey and what risks are actually present in your specific life. Knowing the answer requires honesty, not aspiration, and a conversation with a qualified tax or legal professional who understands both trading and business structure. Whether you end up trading under your own name or behind an LLC, commit to the fundamentals, sizing your positions responsibly, keeping your emotions out of your entries, and building a track record before you build a brand. The entity you trade under matters far less than the discipline you trade with. And if you're ready to take the next step, whether that's real estate investing, finding reliable contractors, or connecting with the right lenders, check out our links in the description below.